The important data that we got yesterday was the trade data. And some people will argue that the exports were weak and imports were strong, which usually implies that there was good domestic demand, and that might be good for prices, that is inflationary for prices. But when you look at the trade data, it was a bit more complicated than that. Exports were certainly weaker than expected, but a lot of that probably had to do with declining prices. So exports for the month were up 7%, but people have estimated, for example, CFR's Brad Setzer, that in volume terms, exports were actually up around 11%. It was declining prices that caused the sort of the disappointment on the export volume levels. On the other hand, imports were up 7.2% in July, which is a huge improvement from June when it was down 2.3%. So that might suggest perhaps a turnaround in domestic demand. But as you try to go through the import numbers, it looks like what really drove imports was the investment side of the economy, not the consumption side of the economy. So it's hard to believe that tomorrow's inflation data is going to be very positive, by which I mean that we're going to see real inflation in consumer prices. I suspect they'll continue to be weak, and that China will continue to struggle with weak demand over the rest of this year.
So, Professor, as you're saying, very encouraging still, probably on the supply side, as some of those import numbers are implying. And as you mentioned, perhaps a little bit more nuanced than we're seeing at the headline. And I'm glad that you pointed out the volume versus value story, because sometimes I think the market seemed to miss that as well. We know that some of these exporters have been slashing the prices to continue to keep those customers. And no doubt that's been hurting the margins. Yeah, I mean, back to the demand side of the equation, what do you think needs to be done? Because we've seen the authorities throwing a lot of sort of fiscal stimulus at this side, expansion of the current trade-in upgrade program. And then also this other announcement about trying to help consumption with this 20-point plan that the authorities came out with over the weekend. I mean, so far it just sort of lacks specifics. It's like we need to wait for it to really filter through the bureaucracy to see the effects of that. But are you seeing or hearing anything as to whether that's actually going to work?
No, there's a big debate about why that's the problem. If you look at the 20-point program released by the State Council over the weekend, there are a couple of things that are probably in the right direction, by which I mean there seems to be talk about increased spending on social services. You talked about the trade-in program, although we have no numbers, and I suspect the numbers are going to be very low. But most of the 20 points focused on the supply side of the equation. And the problem with that is that it basically assumes that Chinese households are eager to spend, but they have nothing to spend it on, which is crazy. They have plenty of things to spend it on. The problem with Chinese households is that household income has been growing slowly, and with all of the uncertainty, households are even more reluctant to spend out of income. So if we want to solve the consumption problem, we really have to focus on the demand side of the equation. What Beijing needs to do is to figure out ways of transferring income from the supply side to the demand side. But here's the problem. Chinese manufacturers are incredibly competitive, and that's not a separate issue. Those two things are closely tied together. The reason they're so competitive is in large part because of very weak household income, which makes the manufacturing side very competitive, but also makes domestic demand very weak. So in a way, and this is very similar to the problem that Japan faced in the late 1980s and early 1990s. It took about 17 years for Japan to raise the consumption share of GDP by roughly 10 percentage points. And when you ask why is it so difficult, It's because if you solve the consumption problem, you do so by undermining the competitiveness advantage, by transferring income away from the manufacturing side of the economy to the household side of the economy. So it's quite difficult to do. It's not just an ideological opposition, as many people argue. It means a structural transformation of the way the economy works.